Gold and silver markets remained steady at elevated levels as global investors moved cautiously ahead of a crucial decision on U.S. trade tariffs, a ruling widely expected to influence market sentiment in the days ahead. Precious metals held their ground despite recent volatility, reflecting sustained demand for safe haven assets amid lingering economic and geopolitical uncertainty. Market participants across Asia, Europe, and North America showed restraint in late-week trading, avoiding aggressive bets as attention remained fixed on Washington. The expected U.S. tariff verdict is seen as a potential catalyst that could reshape short-term price trends, not only in commodities, but across equities, currencies, and bonds. Gold prices continued to trade near recent highs, supported by defensive positioning and ongoing concerns about global growth. Analysts noted that investors remain reluctant to exit gold positions, particularly as policy-related risks continue to outweigh short-term economic optimism. The metal's stability reflects its enduring role as a hedge during periods of uncertainty, especially when trade policy remains unpredictable. Silver prices also stayed firm, hovering close to record levels after a period of sharp gains and brief corrections. Unlike gold, silver's price is influenced by both investment flows and industrial demand, making it more sensitive to shifts in economic expectations. Despite this, silver has managed to maintain strong momentum, indicating confidence among investors that underlying demand remains intact. Traders say the current environment is marked by caution rather than fear. Markets are not in panic mode, but they are clearly defensive. With the tariff verdict approaching, investors are choosing to wait rather than reposition aggressively. This has resulted in relatively narrow trading ranges, masking the potential for sharper moves once clarity emerges. The U.S. tariff decision carries broad implications for global trade. Any outcome that prolongs uncertainty or signals renewed trade friction could dampen risk appetite and prompt a fresh wave of buying in precious metals. Historically, gold and silver have benefited during periods when policy decisions introduce ambiguity into global markets. Conversely, a ruling that offers clarity or reduces trade-related concerns could lead to short-term profit-taking in bullion. However, analysts caution that such pullbacks may be limited, given the broader backdrop of inflation concerns, geopolitical tensions, and slowing growth in several major economies. Beyond tariffs, investors are also closely monitoring inflation trends and central bank policy signals. Persistent inflationary pressures have reinforced the appeal of gold as a store of value, particularly in an environment where real interest rates remain under pressure. Central banks in several regions continue to navigate a delicate balance between controlling inflation and supporting economic growth, adding another layer of uncertainty to the outlook. The U.S. dollar's performance remains a key variable for precious metals. A stronger dollar typically weighs on gold and silver prices, while a weaker dollar provides support. However, analysts note that during periods of heightened uncertainty, gold can perform well regardless of currency movements, driven by safe haven demand rather than technical factors. Silver's recent price behavior has drawn particular attention from market observers. The metal has experienced heightened volatility, reflecting its dual role as both a monetary asset and an industrial input. Demand from sectors such as renewable energy, electronics, and manufacturing continues to support prices, even as speculative activity adds to short-term fluctuations. Supply-side factors have also contributed to silver's strength. Tight inventories and limited new production have amplified the impact of rising demand, leaving prices sensitive to any shifts in investor sentiment. As a result, silver is seen as particularly vulnerable to sharp moves once the tariff verdict is announced. Across financial markets, signs of defensive positioning are evident. Equity investors have shown increased selectivity, bond markets remain sensitive to policy signals, and currency traders are closely watching developments in Washington. This cautious stance underscores the importance of the upcoming decision and its potential to influence broader market trends. Analysts describe the current phase as a period of consolidation rather than indecision. Markets are absorbing information, assessing risks, and preparing for a reaction once uncertainty clears. In this context, the stability of gold and silver is viewed as a reflection of confidence in their role as protective assets, rather than a lack of momentum. For investors with a longer-term perspective, precious metals continue to serve as a hedge against a range of risks, including inflation, currency volatility, and geopolitical instability. While short-term price swings are expected, the underlying factors supporting gold and silver remain largely intact. Emerging markets are also watching the U.S. tariff decision closely, as changes in trade policy can influence capital flows, currency stability, and commodity demand. In many regions, gold and silver remain preferred assets during periods of global uncertainty, reinforcing their international appeal. Market strategists generally agree that the balance of risks currently favors maintaining exposure to precious metals. While valuations have risen, the absence of clear resolution on key policy issues suggests that demand for defensive assets is unlikely to fade quickly. As trading resumes in the coming week, Attention will remain firmly focused on developments in the United States. Any indication that trade tensions could escalate or persist is expected to provide additional support to bullion prices. Conversely, signs of easing tensions may prompt temporary corrections, though these are likely to be closely watched by buyers seeking entry points. In the near term, volatility is expected to increase as markets respond to new information. Traders caution that initial reactions to the tariff verdict may be swift, particularly in silver, where liquidity conditions can amplify price movements. Gold, while generally more stable, could also experience sharp intraday swings depending on broader market sentiment. Despite these risks, the prevailing tone among investors remains measured. Rather than rushing to extremes, markets are approaching the coming decision with a focus on risk management and capital preservation. This approach is consistent with behavior typically seen during periods when policy outcomes carry significant uncertainty. In summary, gold and silver prices remain firm as investors brace for a key U.S. tariff ruling that could influence global markets. Supported by safe haven demand, inflation concerns, and cautious positioning, precious metals continue to play a central role in investor strategies. As clarity emerges, markets are likely to react decisively, but for now, stability reflects a wait-and-watch approach rather than complacency.